Good evening. This is Jeff Scott, and welcome to my webinar for this evening or this weekend, June 23rd, 2013. You're not going to hear a lot of buy recommendations tonight, which may be more bullish than it sounds, in that we all know this market is trash. As my title says, do we have a bounce coming, or are we going to continue to fall into the abyss? To put it mildly, I looked at 500 stocks looking for potential buys. We're in a whole lot, and we'll talk about what I saw and what I think in a few minutes. But welcome for those that are new to this. Hope you enjoy the show. I jump around a lot. I vary things from week to week. Last week was all about how I make the trades and what I use during the day. This will be more my end of day, before the market opens, review session from a top-down perspective, and it's pretty ugly from a bullish perspective. I always start with just a very brief presentation. This will be extremely brief. This is for educational purposes only. Anything I recommend in the spirit of education, not investment advice. I'm a doctor, not a broker. Keep in mind that most physicians lose all their money in the market. And lastly, I do this for fun. I don't charge for the program. I don't sell anything, which is not true, because I'm going to mention some indicators that I will sell at the end of this program, but it's totally not related, and it's just more in response to some requests I had. I pay for everything I use. I pay to use the software, and what I use is what I normally use, not what somebody pays me to use for a presentation. Now, I use a lot of different programs, and because of that, I always hide my desktop, but I have to have one or two real-time trading platforms, probably two in case one of them is down. Everything I do in one, I can do in the other. Those are Tradestation and Thinkorswim. During and before aftermarket, I use HGSI as my tool for analysis. Hopefully you'll see why, as well as my charting tool. EdgeRater, great for testing various strategies, but more importantly, to get a sense of the market. We'll look at that tonight. I use mostly Magenta Trader now for seasonal analysis. I used to be a best choice user. Still use it some. It's got a nicer calendar function. But I've become fond of some of the different algorithms within Magenta. And then I'm a big fan of Ian Woodward and Ron Brown and their various products. One thing that I learned from Ian, who is this very handsome, guru-ish-looking guy in this picture here, is that he's not a guru, be your own guru. And I think that really is a philosophy that everybody should say. You need to learn from people that you think are smart. You need to adopt the things that you think make sense. I've learned a lot from both Ian and Ron Brown. I've read and been to live seminars by Alexander Elder and Van Tharp. Bigelow is my candlestick guru. I read How to Make Money in Stocks at least once a year from William O'Neill. And then we've got his disciples, Morales and Katzer, with Trade Like O'Neill's disciple, with the pocket pivots and Bible gap ups. Here's some of the websites I use, and enough of that. I've talked about that before. I showed this last week, and I'm just going to bring it back again. June is a bad month historically for the S&P 500 and the Dow. Its averages about 0.5% down over the years. It's only a 50-50 down month. In the Dow, it's down 62% of the time, down 1%. And interestingly, it's up slightly on the NASDAQ, and this is going back since 1989. July is a better month. And getting through June, this next week, at least we go to a place where seasonally we might expect a little bit of a respite. But then we still got August and September to come, which are bad months. And then it's funny, I always think of October as a bad month, and I guess we've had, I think in 2008, with the big correction that occurred in October and prior Octobers where they had pretty quick pullbacks. But overall, October is actually one of the stronger months of the year, as is November and December. So we got to get through August and September before we're out of the woods. But maybe July may be nicer to us, as it historically is, than June. I always put this up because you have to know where you're at. And I'm going to make the argument that we've now fallen over this precipice here, and we are in sell mode of fear. Now, that may end very quickly tomorrow, and we may go through a base. We may have a V bottom. We may continue to fall. But I think clearly we've now turned the corner where we were sort of living up here in stage 3, and every time it looked like it was rolling over into stage 4, we had another leg up. That's pretty clear we're in sell mode right now. And the problem with sell mode is if you're a top-down believer like I am, if the market's on a sell, probably doesn't matter what sector and what stock you pick, it's going to be pretty tough to beat the market going short. Now, going long. Going short is a different story, buying puts, and maybe we'll talk about some of that tonight. But bottom line is we are definitely not in a bull phase. We're in a bear phase. Whether or not this is a normal 8% correction, we'll see how close we are to that at some point, or if this will be something worse, time will tell. I mentioned HGSI a lot. I use it. I swear by it. I hope as I'm leaving my current job and becoming more of a free agent that I'll work even more tightly with them and actually help them going forward. Here's the website, highgrowthstock.com. If you don't use it, free 30-day trial. Under investment strategies, you'll see my name and a host of videos that I've done, including last week's video, which I thought was pretty good. And I went through how I actually use some of the tools to make trading decisions. Also on the website, Ron Brown, I think he did something this weekend, if I remember correctly. He uses HGSI for analysis. Very good stuff. All these things I'm showing are free. I've not logged in yet. Gil Morales and Chris Katcher, Trade Like an Unreal Disciple, they come to, at least Gil comes to a lot of our meetings and presents once or twice a year. Number of things here that you can look at. They've got a very good community forum as well. Bottom line is everything, most stuff under here is free. Ian Woodward has a great blog. And as you can see, sort of the question in the market, is there a scary ride to come or up, up, and away? I always like to take a quick look at futures. They were down a little bit when I looked last. It's early. It's only 9:15 p.m. And they are down a little bit more. So futures pointing down, but I can tell you over the last while in this market, pretty much hasn't mattered what the futures showed at this hour because they turn around so quickly. But the bias has been to the downside. All right. I think that's all that I want to do on the slides. All right, so I always start my review by trying to understand what the market's doing. So I like to look at Tradestation and look at some of the elder indicators. And, whoops. And one of the things that Elder does is he paints the price bars blue, green, or red. And in a strong bullish market, they're going to be green. In a market that's less strong but sort of indecision, they're blue. And in a bad market or bearish market, they're red. And his sell and buy rules are you can sell or hold on a red, you can buy, sell, or hold on a blue, and you can buy in green but not sell on a buy or hold on a green. You can't sell on a green, you can't buy on a red. So as we look very quickly, the NASDAQ is really pulled back to the bottom part of their envelope and is red. You can see at least Tradestation felt it had a hammer on Friday, so maybe stopping power there at the bottom of the envelope remains to be seen. We can see the weekly for the first time has turned red. The monthly is green. If we look at the Dow, similar story, bullish around me on Friday, but red, red, and blue. So clearly both the Dow and the NASDAQ have rolled over. And we look at the S&P 500, we'll see something very similar. So quick glance, looking at the red, blue, green rules, and looking at the charts, I see a market that's pulled back pretty hard. Everything is red on the weekly and the daily. And as I said in the beginning, you're not going to see a lot of bullish candidates tonight because I think the most important thing in the market is going to be the market and not what stocks you or I pick. All right. Now let's take a look at EdgeRater, which gives me sort of a picture of what the market is doing. So those who've been here before know I like the buckets, which takes a Bollinger Band, gets 10 slices in it between the top and the bottom. I know that 95% of the time the stocks live within those 10 slices. In a bull market, they live in the lower 5. In a bull market, the upper 5, a bear market, the lower 5. And in a profound move up or down, they get in the first bucket or the 11th bucket or 12th bucket rather, and they're either below the bottom or above the top. If they spend 95% of their time within the Bollinger Bands, when they get extended above or below, they have a tendency of snapping back. So this was what, take a look at 3 days. So Wednesday was kind of a 50-50 day. Certainly the trend was negative. If I remember correctly, Wednesday sold off late in the day. You had very few stocks down at the bottom or below the Bollinger Bands, and frankly kind of equal at the top. The overall gestalt was a little bit heavier weighted to the lower third of the bands, and you could see a score of 57 red versus 43. Thursday was a trashing, and you could see we went to 30% of the S&P 1500 now falling below the lower Bollinger Band, and very few stocks in the green. In fact, 80%. That's a very bearish reading. Now, one hoped for a bounce here, and we got a tepid bounce at best, and one could see that we ended the day on Friday about the same as where we started, shifted a few more things to the right, and we dropped from 30 to 20% below the lower band. So we are still, by edge rater purposes, very much in an oversold market. But as Ian says in his blog, things can get a lot more oversold before they have to bounce. Now, another neat report is the Hindenburg-Omen report. And I'm not going to spend much time. If you follow Ian, you know this is not necessarily something that Ian himself created, but rather it is, let me see if I can put this, hold on, is something that Ian has adopted into HGSI, and Ian has actually refined it. And this is a sign of a market that is in trouble. And one of the things that Ian has done in refining it is he's worked to define a little bit more of what, how do you, what's the best signal, worst signal, et cetera. I'm going to go here. I don't think that's going to get me everything. I'm not going to do that. And he's really refined it. If you see a series of these, you need to stand your head up and notice. You could see we had a single one in January, and nothing really happened horribly. In fact, you can see here, let's see if I can bring this in a little bit. That the spiders did not even sell off afterwards. We had another pair in April, and the spiders sold off about 4 or 5 points before they turned around. And then we had another one hit June 19th. When you start to see several of these, it tells you to pay attention. Now, as I understand from Ian's teachings, a single or even a 2 or 3 Hindenburgs does not guarantee that the market will sell off. But there hasn't been a major sell-off without a Hindenburg omen, I think, ever. So the fact that we're starting to see these things pop up is something to be concerned about. Let me just see, all right, I'm just curious. I think I should go save this and then open it up. So I'm going to put this in my desktop, call it HO Edge, and it's 623. I'm going to come down here, close that, and open this up. File, open, computer, desktop, date modified. Perfect. I wanted to make this smaller so you could actually see more of it. Not quite that small. But basically, this is something that if I go back to, I'm not sure how far back this is going to let me go. Yeah. All right. In 2007, well, you can see basically going back through 2011, there is nothing lighting up in that column. So it's been several years since we saw the Hindenburg. Now, part of that is the market got so trashed in the sell-offs of 08, 09, 07 that it's taken 5 years to really build back to a point where the market's had any exuberance. But now we're starting to see these. And so it's really a stand up and take notice. This is one of the few programs, HGSI and EdgeRater, that actually plots them. And this is a revised version of the Hindenburg omen recently coming, and it's on the EdgeRater site that Ian did, demonstrating some of the changes he made in the formula. I also look at how the market did last week. And you notice the red versus the black, everything pretty much did poorly last week. Thank God I sold off a lot of my holdings at the end of the week last week, because if I just took, for example, I'll look at a couple things. If I look at the S&P 500, and the S&P 500 was down 2.11%. Now, one of the things we've learned from Ian is high growth stocks often fall faster than big stocks. Now, it turned out the HGS 100 behaved down 2.01%, just as the S&P 500. But the IBD 50 fell even faster, down 2.64%. The scary thing is the stocks that I was owning a week ago, and again, I'm looking at lists that I put together on Friday a week ago, showing my high growth stock propensity. They were down 50% more than the market, down 3.68. As I say, I changed my lists off. I don't hold things forever. And I did do some major changes in my portfolio at the end of the week last week. The interesting thing is, where was the winners? Bible gap ups. And these are 3 different scans or searches with different parameters to define a Bible gap up. Up 4.1, up 1.36, and up 0.27. Now, the most amazing thing about that was all 3 Bible gap up scans were up in a market that was down 2%. Reversals and Guppy Darvis are both, which is, I guess, it's a breakout from a Guppy box, from a Darvis box, up a little bit. But for the most part, the market was pretty bad, to put it mildly. So now let's go into HGSI. Don't save that. Close that. Let's take a look at the market and part of our top-down review. Major Markets Plus top-down review, which is purely technical, looking over 3 or 4 weeks, heavier weighted for the last week. And it shows that the strength, according to the combo rank, which is taking in those multiple weeks, the strength was the dollar. Now, that's not a good thing for us as stock investors, because when the dollar goes up, commodities go down, and stocks typically underperform, as did the bonds underperform. So you look, the strength was in the dollar, the weakness was in the NASDAQ, the industrials, a weak market for stocks, period. If you look at the 5-day change, volatility had a resurgence, up 10%. The dollar was up 2%. Gold, silver down 7% for gold, 9% for silver. Oil and gasoline down over 4%. Commodities down 3.4%. The market's down about 2% for the week. So a rather tough week for the longs, almost regardless of what you're long. If I want to look at a couple of these, which you know I do, we'll start with the S&P 500 and do some analysis on that. So I was playing around with this last week. Let me clear this out and just kind of show you where I think we are. All right. So if I tighten this up a little bit more, perfect. Couple of different things. Having corrections is normal. They get rid of weak hands, the market turns around and goes up. So we had a correction last year, ending in June of 12, dropped 11% over 43 days. Stopped at that 200-day moving average. We had a correction from the middle of September, the high here, ending in the middle of November, 8.8%, 43 days. Now, when I think about the last 18 months of the market, I've made a lot of money. So as I look at a weekly chart, and since I'm usually bullish, that's because going back from August of 11, and if I'll put this here, weekly. Really, since March of 2009, we've been in a market that's been in an uptrend. And certainly since the later parts of 2011, we've had 18 months of a very strong market, despite the fact we've had a number of pullbacks. So pullbacks, although painful, occur in an uptrending market and don't mean the party's over. So we have to figure out, are we, is this what we have to expect? 11%, a little bit less over here. What have we had? We've had a series of little ones. We had 3.6%. We had 3.0%. We had 3.6%. And right now, we're at 6.4%. To me, I think we're overdue a bigger correction. I think that these things are painful, but are not the end of the world. This is not necessarily 2007 and 2008. And that it's been a long time since we've had an 8% correction. Good news is, where does 8% take you to? 8% correction takes you to 1550 among friends. All right, that would be an 8% correction. All right, that might be one that is in the cards. We could see a pullback to that 200-day moving average, which is rising, so maybe it gets to this point, which would be a 10% correction. So the first line in the sand has failed. The first line in the sand was that 50-day moving average. The second line of the sand, I think it might be right around here, which is the low of our April pullback. When I look at the pullback here, we're getting right around to that 10% pullback. So what I had when we came in was sort of a question, which is, what is in our cards? Are we about to go from here to here and then bounce? Probably the most likely in my mind. Are we about to drop all the way down to here, the 200-day moving average? More painful. Or are we going to go up here and take out prior highs? I would say that right now, I would be thrilled if we take out new highs because I'm better at going long than I am going short. But I think the direction of least resistance is down. And whether or not we bounce here or we go all the way down to this line here, which is about 1495, and another 100 points down from here, I think are both reasonable. If we break through that 200-day moving average, that's ugly. And we haven't seen that in quite some time. So in the process of perhaps getting to that 8% correction, we've gone most of the way already. Not the end of the world. With signs that we're due a bounce. We did have a green candle low and a reversal day. A little bit of a reversal day yesterday or Friday. Kind of a long-legged doji. Not quite a hammer. Be interesting to see if that moves up from here or if it continues to drop. But I have my targets, and I think most likely we go down and test this 1550 range before we bounce. If I look at others, just for the sake of comparison, if I look at the Dow, I want that one, sorry. The NYSE Composite, pocket pivots down, big kahuna's down, huge volume, similar picture, on its way perhaps down to that 200-day moving average. I look at the Dow Jones Industrial Average, 30 stocks that are very meaningful, had a pocket pivot up, Harami type day, big volume on Friday, which was options expiration day, green candle low, could be setting up for a bounce here, but the same picture as the S&P 500. The NASDAQ has been weaker, but doesn't look any different here, where it's now living underneath the 50-day moving average and had a red candle on Friday. Couldn't really bounce much at all on Friday. In fact, on Friday, it was ended up down 7.38, despite the fact that the other guys actually had a little bit of a bounce. If we look at gold, the bear market in gold continues. At what point does it jump? Your guess is as good as mine. Silver, as bad as gold. Oil, really holding up perhaps a little bit better, going sideways. Oil is an interesting story. The oil, what it was called, I forgot what Lou Powers used to call it, but peak oil, where we'd stop producing new growth in oil, that story seems to be replaced. You're still having reducing reserves in the Middle East, but now you're getting more and more because of the shale oil in the U.S. and maybe the government, and I'm not going to get political, can come up with a way to allow us to actually access that and maybe even export some of our natural gas, which is much more expensive in other parts of the world. Oil going sideways, and then we'll look at the dollar. Moving up here. Now it's getting to a point where it's going to have to get through the 50-day moving average, which may or may not cause it to hiccup. It has a tendency to run up and come back, as it's done now, as you can see several times. Strong dollar, bad for U.S. companies overseas, and bad often for the market. And then lastly, the VIX, sort of the opposite of the dollar. It goes up, actually similar to the dollar, it goes up when the market does poorly. Had a long-legged doji on Friday. It has had a difficulty getting much above this point for quite some time, and kind of looks to me like, well, we'll see. It dropped below these descending peaks on Friday. We'll see if it pulls back down to the consolidation area that it had, closer to 14 to 16. So the VIX up, also bad for stocks. So one might guess then, if the markets look so rough, that we're not going to find a lot of great industries. So if we go look at industry groups, we see we start with 146. If we look at the top-down analysis search, which is 3 to 4 weeks of data, all technical, heavily weighted towards the last week, we can see that broadcasters are leading. REITs actually were down on one day, but up 2.4% over 5 days. If you look at the number of groups that were up over the last 5 days, it was only 14 groups. If we look just on Friday, positive groups are only, there's 73 groups, so a lot more. Maybe that's a bullish sign. But boy, when you look at 5-day performance, there is just not a lot of positivity. So we'll take a look at some of these. I could tell you from my review this week, first thing is, you don't see any oil and gas up here, do you? Energy stocks seem to have fallen out of favor. You don't see a lot of home builders here. Maybe they're getting ready to bounce, but they've been beat up pretty hard. Broadcasters, Disney, one that I have, LGF, another one that I have. Actually, I think I had options on both that expired Friday. I think I closed out the options. Sinclair, there's a number of those. Nexstar that look pretty good still. Regional banks, lots of them, showed up on my weekly review. I got to tell you, I don't understand the managed care thing because they look pretty heavily priced, but Aetna, Humana, United all came up to the top. They may have a lot of work to do with the exchanges, and perhaps people are looking beyond current fundamentals and chart patterns. I think it's mostly what you don't see here. If you go to force index up, you see what I mean, only 15 out of 146 groups were positive, the top two being broadcasters and regional banks. Biotech and pharma did make the list, as did healthcare equipment, healthcare services. A lot of REITs made the list. They had been falling off lately as interest rates went up. Perhaps some concern there. I saw a couple of office REITs that looked interesting. I don't know much about REITs. I think they're going to come down at points in time if the interest rates start to go up. They have been great performers. I know you have to look at how much cash flow they have and make sure they have enough cash flow to pay their dividends. I own a couple of closed-end REITs that pay a nice dividend but are not actively traded. And that's one thing I probably need to learn more about, especially for the next run up. Let's take a look at some of these. Broadcasters, here's a cheap one, Intravision, that looked pretty good to me. Obviously, it's in a big run. That may be the most bullish chart pattern you're going to see tonight. Let me open up MarketSmith. By the way, I've switched to another computer. I'm trying to find a computer that I can use on an everyday basis. So it's got to have a lot of memory and powerful, and a minimum of 1960 by 1600, I think, resolution. And I think I may have found one. This is a Razer. It's actually a gaming computer, but I found historically that gaming computers are the best computers that I can get from the perspective of power. So I like using gaming computers, even though I haven't played a game in a long time, and they gave one free, and I was pretty bad at it. EVC, so cheap stock at $6, so it's really run off of almost a $1.50 stock. Why is it running? It's cheap stock, $500 million market cap. That might make people a little bit nervous because it's starting to make money. And if it makes 40 cents in 2014 in a hot group, do I really think this stock is a $6 stock? No, it's probably a $12 stock. So EVC is one that I think looks attractive and made my buy list. Gray Television, another one. I like to buy these things on pullbacks, and we had opportunities there. It started to run again. And you can see why. Money loser to now money maker, not much in 13, but if it makes $1 or 99 cents in 14, trades at a multiple of 18, it's worth a lot more than $7 a share. So growth coming in there. Here's Nexstar. This one has been a leader. I think similar. I think most of these have some slowing down in their earnings growth in 13. Well, this one a little bit, big acceleration into 14. So here's a sector where you can probably pick one and do very well. Don't know Phoenix Media. I had Disney and LGF, and I guess they probably didn't make the two-day force up. So that's a group. If you want to be long, there might be some things to look at, although maybe it'll be the cable and satellite index. Regional banks, you can't ignore the fact that everywhere I looked in my big stock list, which comes from strong stock groups from various authors and others across the country, I couldn't ignore the fact that there were a lot of regional banks. And in fact, when I looked at my personal buy list, and First Bank Corp was one that I picked, Western Alliance Bank Corp, PacWest. So I actually found 3 banks. Then here's a thrift and mortgage finance, Owen Financial, and I think I've got one more of those somewhere, that I actually found regional banks that I thought their chart patterns looked attractive. So, I mean, a lot of choices here. I like PacWest. Why do I like PacWest? I like earnings. I like to find stocks that have been basing, maybe they're breaking out. And I don't know enough about any of these that I could tell you to buy them without looking at their fundamentals. But let's just take a quick look at PacWest. PACW. This is what got me excited. It's got earnings coming into the stock. It's been basing for some time. You know, DI crossover, big volume of Kahuna, everything is green. I thought this was one of the more attractive banks. Let's look at the ones that ranked up at the top. See what I we like better. BCN Bancorp pulled back, broke above the 250. I like that. DI crossover, everything turned green. Deep Kahuna, lots of volume, makes money. That looks even better. Webster Financial Group had pulled back, now running up. Too much there on me. Pocket pivot up on huge volume on Friday. Don't know this guy from Adam, sort of going sideways, but it has money coming into the stock. This line here is the group index, and you can see how strong the group's index has been on regional banks. So pick your poison. As I said, I found 2 or 3 that I liked. Here's another one, First Bancorp. This is one that I like. Let's see if I can remember why. Based, sort of a cup handle. Got quiet in the handle. Volume came in at the end of the week in bad days, and looks like it's taken off. All green, makes money. First Bancorp. So regional banks with a lot of strength in a bad market. Diversified service industries. Don't know much about these guys. Healthcare, must have looked at them. I think they do laundry. Laundry, linen, so not a very sexy business. That said, HCSG, not your typical high growth industry. So it's growing, slowing down its growth, but it does make money. Hospitals will be a growth industry. Pretty deep pull, so you see the group strength. Pretty good pullback, broke above the 200-day moving average on Friday with the Kahuna 3 or 4 days earlier, pocket pivots. A lot of buy signals here. Don't know much about the group or about the stock, not my typical HGSI group. But in 4 days, 2 pocket pivots, 2 Kahunas, breaking above the 200-day moving average. You know where to put your stops, not much below the 200-day moving average. You're not even risking a buck on this, which isn't a positive group. Problem is the market's bad, and a rising tide raises all ships, and a shrinking tide pulls ships down with it. These are the research and consulting services. Looking at them, you know, Acacia Research is one that's made a lot of lists. Let's just read what it says. Yeah, I don't know how this stands as a research and consulting services. Pretty strong pullback, Kahuna on Friday, change over to DI crossover. Don't know anything about the stock. Don't make money. I would pass. It's a cheap stock and probably a small company with the market cap. Yeah, $300 million market cap. Little small for my taste, and probably misclassified from a group perspective. CoStar Group, what does it say one does? Information services, commercial real estate. So these are a lot of companies that provide market research and tools for research. I mean, how many of you own this stock? Probably my friend George Lee. I can't know anybody else that does, but what a beautiful stock. It has moved from lower left to upper right, has kept on running, now going into a bit of a climax run, despite an ugly market. CSGP. I don't think I'm getting into the stock now. It's a little bit extended. 30 February, 6084. Yeah, I mean, it gets a great multiple. Beautiful stock pattern, kind of late in its game in a period of the market that's high risk, so I would pass on that. But let's look what else is in the group. Solozyme. All right, so this is a funny list because it looks like it's got all kinds of things mixed in. So I'm going to get out of this. It doesn't make money either. All right. So we probably need to take a look in HGSI at this group and start figuring out why some of those things are there. Electronic manufacturing. That's what we like to see, a pullback to the 50-day, a strong move up. Bible gap ups 2 days in a row. Kahuna, tons of volume, everything turned green, a green candle low the prior day here. Is it too late? I don't know. That's for your own decision. MEI, I hope I put that on my buy list. Yep, pullback, ready to run. So what that means to me is it's pullback, found support with a couple of dojis on the 50, and had a kahuna in volume and a Bible gap up. So it's giving me multiple signals to buy. Let's just take a look at its earnings going out there. So I guess this and that EDC would be my two favorites of the day. Yeah, I mean, it's growing at 20 times, $1.30 in 2015, $1.04 in 14. It'll get, if it gets any multiple expansion for the pickup in growth rate, this is a stock that maybe can go up. So those would be two of my favorites so far today. CTS, similar pattern, broke here, broke out on Friday. Everything is green. I love the pattern. So you have sort of a long cup, pull back in the handle and breaking out here. It'd be interesting to see where that one goes. Javo Circuit, old timer, a couple of pocket pivots. Stock's been in a downtrend for so long, probably less excited there. Maxwell Technologies, it's below the 200. I think I would not pay attention to it until it decisively gets above the 200-day moving average. Healthcare services, yeah, I liked Healthways. I was in the healthcare services business, which I sold to Cardinal, and it's a place of lots of opportunity, especially any company that's in the cost containment business. And this one is they provide disease management, and it's definitely about improving outcomes and controlling costs. This is a company that's been around for a long time, and frankly, the stock hasn't done well for ages. Let's take this on a weekly, but it's certainly doing well now. And you can see, when you see this, you know that it's been below the 200 days, so in a downtrend for years. Broke above the 200 weekly back in April, and I think the stock has changed its colors. I believe it made my buy list. Let's see, Healthways. Should have, here it is. Leaders extended or gone. Now it's probably the wrong designation. But it's been an uptrend now for several months. Looks like it's breaking out again. And it's in a type of business that has the likelihood of being a big winner with Affordable Care Act. And you can see certainly an earnings turnaround here, 50 cents in 04 and 14 rather. If it kept at 60 multiple, that's a $30 stock. So I don't think it'll be a $30 stock, but do I think it'll be a $22 stock in 6 months? I do. And I think this is another one I would add, EDC, MEI, and Healthways has, despite an awful market, attractive-looking stocks. Thrift Mortgage Finance kind of goes along with the regional banks. Some strength in these. Here's Astoria Financial. Don't know much about this group. Kind of a choppy-looking chart. Doesn't look that exciting to me. This one looks a lot more exciting. Broke above the 200, held here in January. Has run up a couple bucks since January. Everything is green. Bunch of kahunas over the last week. Volume coming into the stock. pays a 4.5% dividend, People's United Financials. Cable Satellite Index, like the broadcasters, some of these are just incredibly strong. I'll show you a couple. Here's Charter. Can't buy a whole lot of shares of $120 stock, but there are not a lot of bullish-looking charts. And I've shown you some of my favorite ones already. CHTR. So $2.14, growing fast and heavy. I know there's been some M&A in the space, which has caused probably this run-up and discussion about further consolidation. What a very bullish chart, great earnings coming in. That's been priced this high before, and it's certainly toppy looking, although it's not all the way up on the high jump. Interesting stock, great story, not for the faint of heart with that price. Comcast, maybe giving us a good buy point. Pull back to that 200-day moving average. Here's a pullback. Then on Friday, volume, a kahuna, and a pocket pivot. I'd call that a pullback ready to run, and it better meet my list because I'm interested in Comcast if the market does all right. Where did I put it? Did it not make my list? Shame on you. Yep, here it is. Pullback ready to run. And this is the list that I'll be trading off of on Monday. So pullback to major support here, held 2 days in a row. If it trades above the high on Friday and the market is not tanking, this is one that I'm going to be looking at. Healthcare equipment. I wonder about these guys. A lot of these stocks sold off because there's a tax on these companies from Healthcare Affordability and Accountability Act. So a lot of these got crushed. But they've made a very big comeback getting above their moving averages. Here's a beautiful pattern here. A couple kahunas, a couple pocket pivots, all green on Nuvasive. Not much in the land of earnings, which is sort of a must-have for me to buy a stock. Earnings coming in, just not much growth. That's Nuvasive. What else did we have in that group? ResMed, pullback, squeeze here, broke above the squeeze. I bet you saw a mobile breakout. Let's look at that real quickly. RMD, big chart. So we'll talk more about squeezes and mobile breakouts. Didn't have a squeeze, getting close to a squeeze, but it did have a mobile breakout on Friday, which triggered potentially a buy signal. All right, and then the 10th group, because I usually don't go through more than 10, although I probably will because I haven't hit pharma biotech yet. Let's look at pharma real quickly, and then biotech. Of course, I sold my Nectar a couple weeks back. So this is a preclinical company. That's interesting. I did not think they had a product coming to market, so that must be royalties. Let's see, Nectar. Yeah, not making any money. That must be a royalty payment that they're going to see in a couple of quarters. You know, there's a number of stocks that fall into this, and actually I'm going to now take a little break and go through a list of stocks that one of my friends asked me to comment on. So David, and not David Ghilardi, but David S., this is for you, buddy. So let me pull up your email. And so David is a friend of mine, pretty good investor, great entrepreneur. And it's a beautiful pattern on Nectar, by the way, down to the 200-day. A couple of kahunas came in, taken off. They just don't have revenue, and it's hard for me to get excited by these stocks. So here were David's questions. SNTS, Santoris, is one that I own that's given us a good buy point again. So it's pulled back to the 50. It's held on this 51 2, 3 times. I bet it holds again. It goes up from here. It makes money, and if I remember correctly, it's still got some good earnings per share growth. Slowing down, but growing faster than its multiple. If it's got $1.20 in 2014, it's going to be a whole lot more than $20 stock. So I think this stock certainly has continued growth potential, like it. The second one, Oops. Synta Pharmaceuticals. This is an oncology company. They've got an interesting drug, but it's not yet, the data's not done yet, so we don't know the story enough. The other one's a leukemia drug. So they have the HSP drug. This is a flyer. This is when you roll the dice. It's a $4 stock for a reason, and that's because a lot of people have a lot of faith in it. If you have, not inside information, but if you feel that you have information where you think that this stock has a good potential to have a product come to market to be the next pharmacyclics or Medivation, go for it. Right now you'd be bottom fishing, but you know it's not wrong. I did this with Mankind and I got lucky because it's had a nice pop. I've had several of these do nothing. ENTA. Antenna Pharmaceuticals, too new for me to comment. Don't know this stock at all. Don't see anything on this chart pattern unless I had a good story that I knew about that would make me want to. Genomic Health, these are one of these molecular profiling companies that are great at predicting risk. It's at a great buy point. Now, it's been a stock, let's go to Parker Smith, GHDX. Not a really great earnings curve, up and down, up and down, up and down, up and down. Usually gets into about 30. Last year got to 37 before it pulled back. It's at the high end of its range, big multiple stock. What I like about Genomic Health is that they make a great test for predicting the need for chemotherapy and breast cancer, and they've got some new tests for prostate cancer and in colon cancer that will possibly add to it. From a perspective of when I buy stocks, again, I'm not sure I'm buying this one because I don't like its earnings. Pull back to the 50-day moving average, sort of a Morningstar pattern, a pocket pivot, a kahuna, mostly green above. It's at a great time to buy. So I don't know if I want to buy this specific stock, but based upon its chart pattern, it's a great time to buy. And ANTHA. Some of these are real tiddlers or little stocks, so I don't always know the little guys. And I'm not sure ANTHA, A-N, it might be too small to even get in my database. Let's try this one. All right, ANTHA, too small. Can't tell you anything about that one. BGMD. And for others that want me to look at stocks, just email me before my show, and I will, Sunday afternoon, I'll do the same thing for you. BGMD, Big Medicine. David, this is, you're looking at garbage companies. Less than $2, no earnings. These are all about a story. You have to know somebody who knows somebody who knows somebody who knows somebody who knows that they've got something coming, and that's why you buy these. And CSBR, probably another one that's a little guy, CSBR. All right, so I really like Santoris. SNTA is interesting because it's a real company that sold off hard at a good buy point, but you're banking on a product without a whole lot of certainty. And Genomic Health, I like the chart pattern. All right. Let me look and see if there's anything else that I liked on the pharma side. Yeah, I'm not too excited there. Then last, I'll look at biochemistry. And I got to be honest with you, none of these, here's your Genomic Health, really jumped off and smacked me in the face today. But MPSP might be a good buy point. Similar to the Genomic Health, here's a stock, unlike Genomic Health, that's in a strong uptrend, which has, and they have a product on the market, pulled back to that 50 and held with a bullish candle on Friday, tons of volume and a big kahuna. This tells me that money's coming into the stock and somebody's interested in it. I might want to keep an eye out on MPSP. So if you're longs, I probably have depressed you because I haven't shown you a whole lot of great stocks. I've shown you some pretty good looking charts, but there's not that many of them. And frankly, I'm not sure we have business going long on Friday unless, on Monday, unless the market turns around and some things, we see the indices trading up. Let's take a quick look and see where we are in the futures. 10 o'clock, breaking down to the bottom, so clearly in a downtrend still. These are today's futures. These were the lows at noon on Friday before the markets pulled up. So futures down does not foretell a great story for the market this week. A couple other things. I did a group inclusion filter to see other stocks that might look good. So maybe we'll take a look at that and look at some of them before I say goodnight. See, remember I mentioned that some of the healthcare companies, Cigna, Green Mountain, Fleet Corp, Jazz, Pharmaceutical, Chewy Holdings, a restaurant, Coraxo, a clinical research company. Here's that Method Electronics we saw, Priceline, a few others. We can quickly look through some of those charts. Go through the first 10 or so by raw combo. So here's that Lionsgate I mentioned before. This is movies and entertainment. Going sideways, I let my options, I catch out my options. I remember they've got some good earnings coming in. I just thought that their momentum was slowing. And you can see $1.66. I mean, 17 times $1.66 is about 21.22. So really the earnings not changing 13 to 15. I think the stock goes sideways from here, which is why I was okay to take the cash out and not hold these things into option expiration. Team holdings, I think this is a pollution, healthcare services, outsourced, healthcare staffing, billing collection, consulting services, don't really know them too well. Lower left, upper right, pullback, pocket pivot. Makes money, well, maybe I should know Team Health, TMH. Multiple 25, growing next year, 22%, $2.19. If it keeps that PE, it goes up to 50. Not a bad looking story. That won't be interesting. Market Access Holdings, pocket pivot on Friday. Not that exciting. This is what I saw with a lot of the insurance companies. Not much in the way of earnings per share growth. If I go out here and I look at Cigna going out the next couple of years, growing high single digits. But you look at the stock performance. These stocks are on fire, and I guess people are starting to figure out with the exchanges and the Healthcare Accountability and Affordability Act, there might be a lot of opportunity. And it looks like this guy's breaking out and going to run again. A couple of pocket pivots in a row, Kahuna, huge volume, all green. Got to like this, not at the top on the high jump, that's Cigna. Jazz, one of my holdings, pulled back hard on Thursday and Friday. Good earnings per share growth, probably eventually going to slow down. Much better earnings growth than a Pfizer or a BMS. Trades at a multiple of 12, growth rates twice above that. If it makes these earnings numbers, the stock's way underpriced, and that's why I continue to hold it. There's a number of targets in the 70s on the street, so it's getting closer to being fairly priced than it's been for a long time. Coraxo is one of those clinical research companies, nice earnings per share growth. Sideways, looks like it's taken off again, one to perhaps watch. Everything is green. Method we looked at already as the chart of communication. So on that note, we respond to some of the questions. I will, on my section of HGSI, no later than Tuesday, post Thinkorswim script for all the major indicators that I like to use. So, for example, I need to see all this stuff. Hold on a second. So, for example, I will post. If you look, I like to do scans. And so one of the scans I like to do is a MOBO breakout from a squeeze. All right. So these should be stocks that have been squeezing, going sideways, and then all of a sudden they take off. And in a bad day, I might not see a whole bunch. So these were the MOBO breakouts on Friday from a squeeze. So I might want to take a list of this and go look at some of these stocks. So I scan for MOBO breakouts. I scan for pocket pivots. And you can do it intraday. I mean, again, looking for stocks that I might want to go pay attention to. I've got some proprietary scans that I'm not going to provide looking for institutional volume. They're proprietary and I pay for them and I sign documents because I'm not going to share them. But I do a lot of scans within thinkorswim, and I've got permission on pocket pivots and Bible gap ups, red candle high, green candle lows, squeeze, MOBO breakouts and breakdowns that I can share many of these. And so I will, no later than Tuesday, post them on the HGSI board. You're sort of at your own risk when it comes to putting them into your thinkorswim. But you pretty much have to do it yourself. I can't upload them for you. So those will be made available. I know some of you use Tradestation. So just to remind you, MDONC, let me open this thing up. Here is my email address, mdonc@mindspring.com. For those that are interested, I will be willing to provide a package at a fee. That package will include MOBO breakouts and breakdowns, squeeze, red candle high, green candle low, pocket pivot, and Bible gap ups. I have worked with a programmer at my expense to create these. I can create them as indicators in a radar screen. So intraday, for example, I can look for what Bible gap ups are occurring in the market at a given time. And I look for green in this box here to tell me there's a Bible gap up. And surprisingly, on Friday, there were quite a few. All right? I can look at during the day. Are there breakouts, MOBO breakouts? I might want to be looking at these because they're telling me during the day these are stocks that are moving, and I'm looking at a very large list of stocks. So I can provide them in a radar screen format as charting tools. MOBO breakouts here. I'm going to have to redo the squeeze so that's mine and not somebody else's, but I've got the formula for that, so that shouldn't be a problem. I can also do, if you look at high jump, which is another one that I can include, I can actually plot on a scale of 0 to 100, and you can set yourself the time frame, how high the high jump is compared to the highest high in a given time frame. So I have a number of Tradestation indicators. I will package up, I think there's 6 of them. It'll include charting, radar screens, and scanner. For example, I can scan, and these scans unfortunately in Tradestation I think are just end of day or end of bar. Green candle lows, lows at a squeeze, red candle has a high jump. Each of these scans I'll include. I'll include all the candle scans, the breakouts, breakdown scans, the squeeze scan. I'll include the pocket pivots, high jump, and Bible gap ups, as well as some of these scans where I like to combine things. For example, what stocks today, I can look at MOBO breakouts at a squeeze. So that gave me, in the universe I searched 47, of which 41 had a pocket pivot. And then I could look at Force, Kahuna, Pocket Pivot, Bible Gap Ups, and a Mobile Breakout, 9 stocks. Now, odds are, we're going to look at these real quick. These are strong stocks because they just hit a bunch of positive changes. So let me go here. And I think I already had that called my Pentascan. Let's see. All right, so these were them. It's very quickly. This was a scan looking for the best stocks in the market. Here we have a Bible Gap Ups. You saw how they did last week. Pocket Pivots. I mean, not Pocket Pivot, rather. Big Kahuna, lots of volume. Everything turned green. So Force Kahuna, Bible Gap Up, and volume. This is Fresenius. They're a dialysis provider. Micron, big run. You're seeing consolidation of the DRAM manufacturers, and that means pricing goes up, supply goes down, and these companies do well. In a great run, and you could see it had a gap up on Friday, though it didn't meet my criteria in HGSI for a Bible gap up. ResMed, we already looked at that, but here's one that had Pocket Pivot. It gapped up as well. Don't know this company from Adam. I probably wouldn't get excited by it. Here's one that really broke out nicely on Friday, but it was because the bid came in at $28, but it was a Bible gap up. Kahuna, huge volume. Tesco Corp, another Bible gap up, kind of a doji, but with the Kahuna. So I use my scans. Theravance had an approval of a drug to kill staph infections, pull back to the 50, and then they get the drug approval at a Kahuna and a big gap up and a Pocket Pivot on Friday. So, and then Wells Fargo, DI crossover, Pocket Pivot, Kahuna, positive Force. So I use the scanner to help me find some of the best stocks. So I will package up what I showed you, the chart indicators, the scanner, and the radar screen tool, plus instruction of how to do it. It'll have to be customized for your machine, and it will be in the neighborhood of $400. If you have interest in that, it would be all that you need to do the different things that I showed you. Let me know of your interest so I decide whether or not I pay the programmer and do the next step. mdonk@mindspring.com. If we decide to go forward, if I get at least 5 people that want to pay for it, then I'll pay the programmer to get it done. It'll take me 3 days. So on that note, I finally just tried to sell something, so I usually don't. Thanks, everybody. Have a great week. Remember, it's the market that matters more than your stocks. And if we have a tough market at the open, we're going to have a tough time making money being long. We're getting to a point where a bounce is due, but we may get a lot lower before the bounce comes, still down 7 points. Have a great week trading. Good night, everybody.